Hi, this is Yahoo. I'm a option trader. It's 7:38 a.m. Japan time on August 19, 2025. Let's review yesterday's market. First, the Japanese market. The Nikkei Inigo closed at 43714 yen and the night futures were at 43814 yen, showing continued strength. The advanced decline ratio was plus 0.77%, which means momentum remains strong. Stock picking in individual names is also very active, with over 2500 stock rising. On Friday, 54% of stocks advanced, but yesterday about 17% were up. So not only the index, but also individual names is strong, which shows that serious money is flowing into Japan. The Volatility Index was 24.85. Recently, it's been stable around 24 level, suggesting no sign of stress. The PER stood at 17.93x, with the Nikkei PPS at 2438 yen. On PER basis, we've already exceeded the July 2024 level, but while emerging, making it hard to predict how much further it can rise. Previously, I saw 18.1x PER as a selling, but with EPS recovering, it could push higher. Historically, the next barriers would be around 22x or 25x. The big question is what exactly is the market pricing in right now? There's growing speculation that the Ukraine war might finally come to an end. Talks involving President Zelensky and President Putin and President Trump could be held soon. Russia's resource sanctions have lasted about 3 years, when costs push inflation. If the war ends, this issue may be resolved, and combined with potential rate cuts, the equity market could rally significantly. The atmosphere reminds me a bit of the November 2020, when the sugar buying rally started. But the key is whether this time turns into the genius and sustainable rally. Japan is particularly strong. Nikkei at 47000 yen level may not be realistic anymore. Of course, historically shows that when everyone gets a bullish, that can mark the top. So cautious is still warranted. That said, I see more opportunities in individual stock trade rather than just the index. Growth stock in particular remains very strong. Turning to the US, the S&P closed at 6449, basically flat. Compared to the US, Japan clearly looks strong. The 13-year GDP and not US Treasury yields stood at 4.9%. The move index ticked up to 81.82 after dipping into the 17, but still looks relatively calm. The US bond market continues to be well bid, showing steady demand. Capital flow is clearly the capital is flowing into Japanese equities, but it is coming from directly from gold and Bitcoin. Gold is $3334 with momentum clearly negative. Bitcoin failed to stay 120k dollar and was at $11650 yesterday, also losing the momentum. Some money may be rotating from US equities, but biggest shift looks like capital moving from the commodities back into Japanese equities. If the Ukraine war ends and energy supply normalizes, consumption will pick up again. But in the case, and the next risk could be power shortage, especially given AI-driven electricity demand. So I think we need it to keep watching the energy market closely. Okay, summary. Japan, both index and individual names remains very strong. The PL still having room to expand. U.S. flat bonds remain supported. Flows out of the gold and Bitcoin into Japanese equities. Key came Ukraine war resolution plus inflation shelter, risk electricity shortage and fueled by AI demand. That's all for today. Please follow my contents with the mindset of the going rock bets. I'll see you tomorrow.